Alright guys, it's time to add another video to my free education playlist called Stock Market for Beginners in 2019, which you can find up here down in the description or at the end of this video on a clickable card. But today we're going to be talking about balance sheets. And so, anytime that I'm investing in a stock, I always have to look at the balance sheet. It's a very important component to any stock analysis that you do out there. So today I'll be explaining the balance sheet for beginners. If you're more advanced, you're probably not going to get a whole lot of value from this. This is really more for beginners, but I'm going to walk you through the entire steps and everything that goes into a balance sheet. And I'll make sure that you understand how to read them and analyze them and all that good stuff. Let's go ahead and get started. What's up everybody, my name is Ale and welcome to my world of stocks. So by the way, if you guys like this series, make sure you hit the like button if you want to see more advanced videos in the future. What I plan on doing is just adding more beginner friendly videos, at least for right now, and then as we progress through the year, getting much more advanced, and then maybe even tackling some harder stuff like, stock options and things like that. So if you'd like to see that kind of content, then make sure you let me know by hitting the like button or leaving me a comment. Now the way that we're going to do this today is I will start by giving a brief introduction to what a balance sheet is and just kind of how it works. And then kind of like in the second half of the video, we're going to actually look at an official balance sheet of Microsoft, which is actually my second largest stock. So I'm going to show you how to find a balance sheet very quick and easy way. And I'm going to actually walk you through every single listing on that balance sheet. And I'll explain what I look at and what matters to me and what doesn't and all that kind of stuff. Okay, now in its most basic form, you can think of a balance sheet as a statement of the assets, liabilities, and equity of a business. And it helps you understand how the company is performing and what kind of financial conditions it's currently in. Now, a company with a healthy balance sheet is likely performing well, it's more likely to survive difficult economic conditions like a recession, and it's also more capable of making acquisitions or reinvesting in itself in order to support future growth. On top of that, a healthy balance sheet is also key when trying to find a good dividend stock that can support and sustain current and future dividend growth. Now, the balance sheet can also be considered one component of the three primary financial statements of a company, which also includes the income statement and the cash flow statement. And even though this video is focusing on the balance sheet, I will still show you how to quickly find the other two, and I'll be making detailed videos on those as well in the future and adding them to the free education playlist. But for now, let's break down the primary categories of a balance sheet, which are the assets, liabilities, and equity. Okay, starting with the assets. Now, those are the resources that benefit a company by providing economic value and include items like cash, short-term investments, long-term investments, and other things like that. And I'll break those down further when we go through an actual example. Now, when looking at liabilities, those are debts or obligations of a company and include items like short-term debt, accounts payable, long-term debt, and so on. And again, we'll break those down more in just a second. And finally, when looking at equity and defining it in simple terms, the equity is what the company is worth. So by that definition, we can gather that the company's equity is considered the same thing as the company's net assets or net worth or net capital. And so to find the equity, all we have to do is subtract the total amount in liabilities from the total amount in assets, and we're left with the company's equity. And that's why the company's assets are always equal to the company's liabilities plus the equity, because that means that the balance sheet is actually balanced. And that's why so many investors focus on the PB ratio metric, because it divides the price per share by the equity per share to tell you how much value you're getting if you invest in a company in terms of net assets. Now, before we dive into all the individual parts of a balance sheet, I want to cover a few basics that I generally look at. And those are the working capital or the current ratio, and then the total ratio. Now, the working capital is useful for telling us how a company is performing more recently. And we get the working capital by subtracting the current liabilities from the current assets. And in most cases, I like to see a largely positive working capital, as it likely means that the company has been performing very well and are building up a lot of cash or liquidity that can later be used to pay down long-term debt or finance growth investments and acquisitions. Another way of doing this is by looking at what is called the current ratio, and here all we do is divide the current assets by the current liabilities to give us a ratio. Now, I generally look for a current ratio of at least 1, but if it's even better than that at like 2 or 3, then I generally do prefer that, as it means that they can easily pay off their short-term debt and still have positive cash or liquidity left over. And then finally, we have the total ratio, or the asset to liability ratio, and that's just calculated by dividing the total assets by the total liabilities to get a ratio. And just like before, I like to see a ratio of 2 or 3 if I can get it. However, I'd argue that some of the figures included in total assets can be misleading, so I prefer to look at a made-up ratio that I call Allah's ratio, and I calculate that by taking more liquid or more current and realistic assets like the cash, net receivables, any short-term investments, any kind of tangible assets, and I also throw in any long-term investments as well, and then I divide all of that by the total liabilities to give me a really conservative ratio that I know I can trust much more. And that way I know that the company's balance sheet is probably even better than I'm giving them credit for. However, one quick thing to mention is that some investors do actually prefer that the assets be lower. I know that sounds a little crazy, but the way that they see it is that, if you say, oh, I like their current ratio because it's like a 2-to-1 or a 3-to-1, some of these investors might say, no, that's a bad ratio because I want that company to be using the debt that is available to them to fund future growth initiatives, and they don't really like them to be sitting on a bunch of cash and building up a big asset position. So I'm not really in that boat. It's a more advanced topic. We could talk about that in a separate video, but I just have to throw that out there because some investors do disagree with the notion of, a current ratio of 2-to-1, 3-to-1, 4-to-1 is actually a bad ratio. I'm not in that boat, but some people are, so I just have to throw that out there. All right, guys, so now that we have some of the basics out of the way, let's move now to a step-by-step guide, and let's actually look at a real-life example. So we're going to look at my number 2 largest stock, which is Microsoft, ticker symbol MSFT. Now, you can, of course, just go to a company's investor relations page and you can get this information and even more information, but I'll just give you a quick website that you can use that is usually pretty accurate for a lot of this. And you can just go to nasdaq.com, and then in the search bar, just type in the ticker symbol, which in this case is MSFT, and then hit enter. Now, once you are on the stocks page, you're going to want to scroll down and look at the guide on the left bottom hand side and click on income statement. And so then you get to this page here, and this is where you can click on any of the 3 primary financial statements. But for today's video, we'll just be looking at the balance sheet. So go ahead and click on the balance sheet tab. And then if you want to get more recent data, you can also click on the get quarterly data. But for this example, we'll just be looking at Microsoft's fiscal 2018 balance sheet. Okay, so starting at the top, we can see that these values are all in thousands. And the first category that we'll be looking at is current assets, which are usually considered cash or something that can be easily converted into cash within the next 12 months. And that's really what makes it, considered current. And the first item that we see in this category is cash and cash equivalents, which is pretty much considered liquid. But here we see that Microsoft has almost $12 billion. And then there's short-term investments, which I usually consider to be very similar to cash in that it's investments that the company intends to liquidate within 12 months. So that could certainly be stock, or it could even be bonds if the maturity date is within a year. But it just basically means that the company feels that they can get a better return on their money if they invest it in the short term rather than just keep it in some sort of savings account or CD account or whatever else. But just keep in mind that a company doesn't have to actually liquidate it within 12 months. They just have to say that they intend to. So if their current assets are looking a little weak, they may even pull some of their long-term investments and say, hey, we plan on liquidating these within a year so it qualifies as a short-term investment, and then they can add it to their current assets. Either way, we see here that Microsoft held over $121 billion in short-term investments, which is very high and very impressive considering that it's very similar to cash. Next, we have net receivables, and that's just payments that haven't been collected yet, but should be collected within a year and probably much sooner than that, so it's pretty liquid as well. And Microsoft had over 26 billion there, which is also very good. And then inventory is pretty self-explanatory. Microsoft has over $2 billion worth of inventory that can be in the form of various different products that they haven't sold yet, but are expected to sell within the year. And for the size of Microsoft and how diversified they are, I think that this is a really good number as it's not too high. But if this was a lot higher, then maybe I would start to worry and think, okay, can they actually sell through this inventory, or is it just gonna, be taking up space and not bringing in any money? But at less than 3 billion for a company the size of Microsoft that does, it does over $100 billion in sales, it's not really a concern here. And then finally, we have other current assets, and that could be a number of different things, but the important thing is that it should be convertible to cash within a year, and Microsoft has almost $7 billion there, and then they finish off their total current assets at almost $170 billion, which is just absolutely massive, and it's very impressive. Okay, moving on to the next category, we have long-term assets. And these are generally assets that will not be liquidated within 12 months. And, there can be a number of reasons why a company holds onto assets longer than a year, but generally it's because they feel it won't be beneficial or as profitable for them unless they hold those assets or investments longer than a year. And then there's, other things that we'll get into in a second, like fixed assets. Those things, those just kind of have to be long-term assets just by the nature of what they are. But okay, first up here in the category, we have long-term investments at almost 2 billion. And again, this is just investments that they plan to hold for at least 12 months and maybe much longer. Next, we have fixed assets at almost 30 billion. Now, fixed assets can be things like land or buildings. So obviously, you're not going to be converting those into cash within a year. So think of it as assets that you wouldn't really plan on selling, but you technically could if you wanted to, but it's just not very likely, and especially not within a year. So we categorize them as fixed assets. Okay, next up here we have goodwill at over 35 billion. Now, this one can be a little tricky. It can sort of be subjective, but not really, but you'll understand in a second. But it's not a tangible asset, so some investors don't take it too seriously, but then others do. But either way, when looking at what it is and how it's calculated, you get goodwill by acquiring other companies. So when you acquire another company and you pay more than what they're worth or what their net assets are worth, then that's essentially counted as goodwill. So you're paying extra money because a company has a strong brand or a strong product or something that can't really be defined as a tangible asset, but because it's going to help your business in the future, you're willing to pay an extra price for the company. And then whatever that extra price is, you list it on your balance sheet as a long-term asset in the goodwill category. Now, it does make sense that Microsoft would have a lot of goodwill here because they've made several acquisitions. One that is very famous is the one in LinkedIn, where they paid over $16 billion extra because they felt that LinkedIn would help them grow in the future. And then they added that $16 billion to their goodwill because they see it as a long-term asset that will help them in the future. So you can see how this might be a little subjective, and it's a little weird, and I wouldn't necessarily like to calculate this when looking at like my ratios, like my asset to liability ratios. Goodwill is not one that I generally like to calculate, so that's why I modify my ratios a little bit. But anyway, just keep that in mind. That's pretty much what it is. Okay, next up here we have intangible assets at almost 15 billion, and this will include things like intellectual property, copyrights, patents, and other things like that. And Microsoft obviously has a lot in this category since they're mostly a software company. Okay, next up here we have other assets at over 7 billion. And again, this can be a number of different assets, but they're not likely to be liquidated within 12 months. And then finally, we have deferred asset charges, and this is at $0 for all 4 years. And honestly, I almost never see anything listed here, so I don't pay too much attention to it. But from my understanding, it can be things like prepaid expenses, where maybe they paid for a service but didn't receive the service yet, so they count it as an asset because they should be receiving it in the future. But again, I don't pay too much attention to it if I'm being honest. Okay, so that leaves us with total assets at over $250 billion, which is pretty darn massive. But of course, we need to compare that to their liabilities. So let's transition now to the next category and take a look at current liabilities. First up, we have accounts payable at almost $17 billion, and this is just bills that need to be paid and are generally due within 12 months. Next, we have short-term debt at almost $4 billion, and that's pretty self-explanatory. It's just debt that is due within a year. And finally, we have other current liabilities at a massive almost $38 billion, and that's also pretty self-explanatory. It could be a number of different things and are generally due within a year, and you can usually find more information on what's included in that category if you look at their yearly report that they filed. But this one for Microsoft is pretty high. And so then we end up with total current liabilities at pretty close to $60 billion. Okay, moving on to long-term liabilities, we start with long-term debt at over $72 billion. And this is just debt that doesn't necessarily need to be paid within 12 months, although it obviously can be. Then we have other liabilities at $41 billion. And next we have deferred liability charges at $4 billion. And that's sort of like future liabilities that haven't necessarily been acquired yet, but they will eventually in the future. Then we have miscellaneous stocks at 0, and I don't normally see any values there, but if I were to ever see any value there, I would probably just refer to their annual report and see exactly how they break it down and see what they're listing there, but otherwise I just ignore that one. And then we have minority interest also at 0, and I'm not too familiar with this one, but I think it just accounts for the liabilities of a subsidiary that they own less than 50% of, which makes them a minority holder of the company. Otherwise, they would just be, like the parent company. But yeah, that's kind of just how I see that. But I usually don't see much there. And then finally, we have total liabilities at over $176 billion. Okay, so that's pretty much what I look at. The final category of stockholder equity just gives you the total equity, which is almost $83 billion. And that's just the difference between the assets and the liabilities. But to summarize the main parts, Microsoft had current assets of almost $170 billion versus current liabilities of $58 billion, giving them a current ratio of almost 3-to-1, which I think is very strong. And then their total assets came in at almost $260 billion versus total liabilities at $176 billion, which gives them a total ratio of around 1.4-to-1, which is pretty decent. Nothing like really special, but it's pretty decent still. But these ratios could certainly change depending on what variables you care more about and how you want to calculate everything. But overall, I'd say that while Microsoft does have a lot of debt, they also have a lot of assets, and I think their balance sheet is pretty strong overall, considering that their business is performing very well and is growing at a fast rate. Okay, so that's it for today, guys. I hope that you enjoyed this video. If you did, make sure you hit the like button and make sure you check out that playlist. I'll be adding to it over the course of the year, and I will catch you guys in the next video. Hope you all have a nice day. Take care. Bye-bye.